here is our governance model. Here is really how it's set up to work. I started speaking about this earlier, so we got our state legislature, our Senate and our House, and they're really our quote-unquote shareholder group, right? What they're really concerned about are dividends from the bank, because we are a for-profit entity, okay? We make profit and we return dividends back to the state. We're accretive to the general fund. We do not require appropriations from the general fund. We don't spend any general fund dollars or any appropriated dollars. We instead borrow the state's deposits, okay? We leverage that through that magical leverage in banking, and then we make our net profit and we return that in form of dividends back to the general fund or back to the people who own us. So our shareholder group are more interested in the profit and return that Bank of North Dakota can give, as well as the mission and strategy and everything like that, and really the dividends, because at the end of the day, we're a financial tool bolted on to the state's mechanisms. The Industrial Commission, which I introduced you to, that's our independent board of directors, and they provide oversight of us. They choose who is the CEO, what to empower the CEO with, which is the most important factor of really any board of directors out there, private industry or not. They do strategy approval. They are in the credit decisioning process over certain dollar amounts. In our case, over $25 million in aggregate lending relationship. The governor and the attorney general and the Ag Commissioner, they vote on that credit, and sometimes they turn them down, sometimes they approve them, just kind of operating like a normal bank. They also set our dividend policy. They also set our capital expenditure policy. So they are truly operate like a legal board. But these three elected officials, as you would expect, are extremely busy. They can't donate an entire or a lot of time to overseeing the Bank of North Dakota or the state mill and others. So we do have an advisory board that is appointed by the governor, and that's 13 individuals from different industries in the state. So we've got key bankers on there from the state, key credit union leaders. We've got officials and CEOs and CFOs from the oil and gas industry, from agriculture, in the construction industry. It's a nice, well-rounded board that we go to first, and they're part of credit decisioning, they're part of strategy oversight, they're part of everything. Essentially, everything goes through them first, and they, with executive management, they make the recommendation to the Industrial Commission on decisions like these. And then, of course, we have executive management, which I oversee. And we do the strategy and the execute and the report. We're structured like a private $10.6 billion bank. I'm the CEO. I have a chief credit officer. I have a chief financial officer. I have a chief risk officer. I have a chief human resource officer. I have a chief fintech officer. I have an executive team. And then down through the ranks, we have our own credit underwriting department, our own business bankers, our own enterprise risk professionals, our own loan operations, deposit operations, all the things that how a private bank is structured. We are structured as a $10.6 billion private bank. We are overseen. We are audited. Now it's nuanced, right? Technically, we are not subject to federal regulation that banks and credit unions are subject to because we're owned by the state. We're chartered by the state. We are not federally chartered. We do not offer FDIC insurance because we don't go out and get deposits from the street because that would be direct competition with our banks and credit unions. We would never do that. It's against our founding principles. However, there are good practices in federal regulation, like allowance for loan loss considerations, like enterprise risk management. There are good things out there that the federal regulations have put forth to make sure banking stays safe and sound. And our 91 financial institutions who we partner with, they are all subject to FDIC, OCC, National Credit Union federal regulation. And all of their borrower data is shared with us and vice versa. And so we, as a best practice, we do follow federal regulation. We really do. But we're overseen at the state level. And Lise Cruz is our head of North Dakota Department of Financial Institutions. I just met your head regulator here for the state. She would be his cohort in North Dakota. They do an annual safety and soundness exam on us, and then we are audited for our audited financial statements by Eide Bailey. We're also annually rated by S&P, and we maintain an A- stable rating, very, very strong rating.